Ventus Energy investors are facing one of the most significant developments in the platform's short history. Following the BAFIN Order in Germany, payment restrictions and increasing uncertainty around the platform's future, Ventus management has announced plans to enter a court-supervised restructuring process in Estonia. Recently, management held a lengthy investor call explaining what happened, why they believe restructuring is necessary, and why they think investors can still recover their money. In this video, I want to analyze their arguments, separate facts from opinions, and discuss what investors should be focusing on going forward. Keep in mind that the situation is still developing, many details remain unknown, and investors should do their own research. So what is Ventus management saying? According to the CEO, several factors combined created the current situation. The first is the BAFIN Order in Germany, which required Ventus to cease and wind up its unauthorized deposit-taking business immediately. Ventus argues that the order was triggered by a complaint and that BAFIN concluded the company's mezzanine loan agreements did not contain certain clauses required under German law. Management claims that they have been cooperating with BAFIN, appealing the decision and negotiating possible solutions. The second issue involves banking relationships. According to Ventus, once the BAFIN order became public, payment institutions, including Paysera, restricted or terminated services, making it difficult for the company to process investor funds and continue operating under the previous model. The third element of management's explanation is what they describe as coordinated attacks against the company. During the investor call, management referred to negative publicity campaigns, complaints to authorities, alleged attempts to delay construction projects, personal threats, and even ongoing police investigations. Their conclusion is that all of these factors combined have made it impossible to continue operating the platform as before. Instead, they want to sell their energy portfolio and repay investors through a restructuring process. So is restructuring a plausible solution? Based on the information currently available, yes. One point I actually agree with it is that restructuring is not the same thing as insolvency. If Ventus owns operating energy assets, development projects, permits and subsidiaries, then an immediate insolvency could potentially destroy value. Forced liquidations rarely maximize recoveries. Selling assets through a structured process is often a better outcome than selling them through distressed auctions. This part of management's argument is economically reasonable. However, restructuring itself does not tell us how much investors will recover. Restructuring can result in near full recovery, but also in significant losses. The outcome depends almost entirely on one factor. What are the assets actually worth? So the most important question is asset value. Ventus management repeatedly stated that they are pursuing a sale of the portfolio. They also mentioned that mergers and acquisitions advisor is involved and that multiple potential buyers have expressed interest. This is where investors should focus their attention. Not on social media, not on personal conflicts, and not on online arguments. The key question is simple. What are sophisticated energy investors willing to pay for their portfolio? Because eventually there are only three possible outcomes. Interested buyers become binding offers, buyers make offers significantly below expectations, or interested buyers walk away. The market ultimately determines the value of the assets. So the management's evaluations, online allegations and hopes from P2P promoters do not matter. The actual sale process will reveal who is closer to reality. But what about the BAFIN order? One point I think investors should understand is that regulatory actions and negative publicity are not the same thing. Management repeatedly argued that complaints triggered the BAFIN review. That may be true. However, a complaint alone does not produce a regulatory order. Regulators review documents, agreements, and business structures before reaching conclusions. Whether BaFin's interpretation is correct or incorrect is ultimately a legal question, but it would be inaccurate to suggest that the order exists simply because somebody wrote critical articles or filed complaints. The complaint may have initiated the process, the legal review produced the order. That distinction is important. This suggests that Ventus underestimated the regulatory requirements of raising tens of millions of euros from German investors. They raised roughly half of their portfolio of 95 million euro from German investors without proper legal documentation approved by the German regulator. But what about the argument regarding negative PR? This is where you should be more skeptical. Management repeatedly stated that negative publicity made refinancing difficult and damaged the company's reputation. What exactly is considered negative publicity has not been revealed. In my opinion, the company has not provided sufficiently convincing answers to many of the concerns raised in Carsten's articles. Simultaneously, after his investigation was published at the end of last year, Ventus still managed to raise additional 28 million euro from investors. So the argument that negative publicity has caused any harm to the company's ability to raise funds does not stand. Institutional investors, banks, and infrastructure funds typically perform extensive due diligence. They do not make investment decisions solely because of YouTube videos, blog posts, or social media discussions. What matters to them are things like asset quality, cash flow generation, permits, legal structure, ownership rights, regulatory risks, and expected returns. Negative publicity can absolutely reduce the number of interested buyers. It can slow down transactions, it can create additional due diligence requirements. But it is unlikely to be the primary factor determining whether a portfolio of renewable energy assets can be sold. There is also the incentive question that many P2P promoters do not like to discuss. Ventus became extremely popular among P2P investors. Many content creators promoted the platform, many affiliates earned commissions, some promoters also invested their own money. In many cases, the existence of skin in the game was presented as evidence that investors could trust the platform. However, investors should understand that skin in the game and aligned incentives are not always the same thing. An influencer can lose money as an investor while still earning significant referral commissions. In some cases, those commissions can reach tens of thousands of euros and may substantially exceed the amount personally invested into the platform. The uncomfortable reality is that some of the people who helped attract millions of euros into Ventus may ultimately suffer far smaller financial consequences than the investors who follow the recommendations. This is why skin in the game should never be viewed in isolation. The relevant question is not whether somebody invested, the relevant question is whether their financial incentives were primarily aligned with investor outcomes or with attracting additional deposits to the platform. It does not automatically mean anybody acted dishonestly, but it does mean investors should evaluate incentives carefully. Most of the well-known promoters who produced overwhelmingly positive coverage of Ventus despite visible red flags are almost certainly not in the same position as the average retail investor. For many of them, an investment loss may simply be a business expense, while the commissions earned from promoting the platform have already been paid. This is also why I believe investors should pay attention not only to what somebody says, but also to how they make money. At P2P Empire, we never promoted Ventus, never accepted commissions from Ventus, and never earned a single euro from the platform. From the day we published our review, Ventus was categorized as a high-risk platform with multiple red flags. As a result, we chose not to monetize the review despite the fact that doing so would likely have generated substantial affiliate revenue. And Ventus is not the only example. Over the years, we have intentionally refused to promote multiple platforms that offered attractive commission structures because we believe the risk for investors outweighed the potential rewards. That decision has likely cost us hundreds of thousands of euros in affiliate revenue. But our review has always been simple. Long-term trust is worth more than short-term commissions. Does that mean we are always right? Absolutely not. Nobody can predict the future, and no analyst can identify every risk before it materializes. What we can do is evaluate the information available at the time, highlight concerns, and report on questionable practices when we see them. What investors choose to do with that information is ultimately their own decision. But if there is one lesson from the Ventus situation, is that blindly trusting promoters simply because they have invested their own money is not a sound investment strategy. Ultimately, the success or failure of this restructuring will not be determined by management statements, critics, influencers, or discussions in Telegram groups. It will be determined by one thing: what are independent buyers willing to pay for a portfolio. That number will tell investors far more than any calls or discussions in Telegram. For now, the restructuring case remains plausible, but whether it results in a successful recovery for investors remains the most important unanswered question. Before ending this video, there is one additional point worth mentioning. To date, Ventus has not published any detailed information about the BAFIN order on its website. The company has also not published a restructuring plan or provided a centralized source of information for all investors. Instead, most updates appear to be distributed through calls, Telegram discussions, and private communication channels. This creates an information gap. Investors who are not actively following every update may not fully understand the significance of the BAFIN order, the payment restrictions, or the proposed restructuring process. In my view, a company seeking investor trust during a restructuring should be communicating through official channels as transparently as possible. There is also the question of management credibility. One of the key figures associated with Ventus is Yanis Tima, who many investors will recognize from Crowdester. Crowdester still has roughly 28 million euro tied up in unresolved projects and recoveries, and many investors remain dissatisfied with both the pace of recoveries and the level of transparency provided over the years. Does that automatically mean Ventus will end the same way? No, but track record matters. When investors evaluate the probability of a successful restructuring, they should not only look at the assets, they should also look at the people responsible for managing the process. So in summary, the restructuring story is plausible, the recovery story remains unproven. At this stage, I believe investors should not judge Ventus by management promises, but by actual asset sales, actual creditor repayments, and actual progress on the restructuring process. Until then, I believe caution is more appropriate than optimism. I know many of you are wondering whether this BAFIN risk can materialize for other platforms. I've already covered this in my previous video, which you can watch here. In short, the BAFIN risk is lower for regulated platforms compared to unregulated market players. Keep in mind that this does not mean that any other risks cannot materialize. The regulatory risk is just one of many issues that can cause trouble for platforms or lenders. For more updates on the P2P lending industry, subscribe to this channel. Thanks for watching, and I'll catch you in the next one.